Okay, update on the markets here, and we'll start with TLT today. Very important chart. So this is a way to sort of track bonds, long-term bonds. It's an ETF, and so it's a good proxy for the 10-year yield as an example. When the 10-year yield is going up, this is going down, right? The actual yield, because bond prices move inversely to their yields, right? When bond prices are higher, the yields are going lower. And so you can see we'll start on let's do the 12-month chart for this. We'll take off these drawings to make it easier to see. I mean, this kind of says it all, doesn't it? This is a humongous swing high now, right? This is the yearly charts, right? So this candle is the year 2020, right? We had a green year, but then this huge pullback. Then the next year, it was a red year. But then we had a rally. Maybe got people a little excited. Then look what happened this year. I mean, Jesus, look at the size of this red candle. I'm sure we're going to get a little recovery at some point, but this is very ugly. Now, if we zoom in to see the sort of carnage on a lower level and use cycles to better analyze where we are, on the daily chart, we are on day 28 of the daily cycle. So we're pretty deep in the daily cycle. So we're at the point where we should expect a short-term bounce. That said, same thing for the market. But we'll talk about that. Weekly cycle, same thing. This is very deep into the weekly cycle. We've now made another new weekly low at week 29, right? And notice the last weekly cycle was 30 weeks. That said, this weekly cycle was actually 41 weeks, and it was incredibly bearish. We topped out on week 9, and again, we rolled over until week 41. So we declined for 30 weeks. That's more than 6 months. That's like 7. Yeah, it's a lot of months. And so we're on month 29, deep in the cycle, but who knows? And that's why it's always important to look at look at the good time frame sort of in between, which is the monthly in this case. And you can see this is where we are. We're on month 14. This is how we started May, a gap down month. Month 14. You can see the last weekly excuse me. The last yearly cycle was 15 months, right? So it started here. We had a high on month 3. This was the COVID crash, and then we just declined. This yearly cycle was, in large part, a lot of that was actually that really long weekly cycle. You can see how the cycles kind of converge, and then you can see this was essentially a big bear flag, and now we've just spilled over. I mean, that's what that was, right? Like you can see it here, and it should be obvious after the fact. And the idea is to just kind of look at what it looks like, to think about scenarios of what it could be in real time, right? Like that, you could have drawn that at some point, right? And of course, it may not have spilled over. It may have kept rising, but what happened is it did spill over, right? You got this bear flag, and I mean, look at that. So at some point, you're going to get a bounce, right? We're going to get a move up here. We're going to have to see. I'd have to imagine, 121, or excuse me, 121.75. That's probably some kind of lower time frame resistance, which is why that's there. So on the monthly cycle, we're on month 14. So, we could, but notice that other monthly cycles were more in the 20-month range. So that again favors this idea that we have more room to go in this weekly cycle, and that weekly cycle low will be a yearly cycle low. So potentially a more sustainable bounce. We get yields to a sort of unsustainable level, and then we get some cool off. So we'll have to see. So why is this all relevant? Because I suspect that the timing of this will coincide with when we get a bottom in the market as a whole. So if we think about that, let's say we get a 20-month yearly cycle for TLT, right? That would mean we get our low in November. So that's interesting, right? Again, these are all just scenarios. They're not predictions. They're like what ifs. And then we watch the price action to understand if, what scenario is most likely Like what's the most likely outcome depending on how things are playing out, right? So you could see a world where we continue to descend until November 1st, right? Like, or I should just say November. And that means we'll have a few more daily cycles within this weekly cycle. So again, thinking about this daily cycle being on day 28, you can see these rallies are getting shorter and shorter. So this rally was 8 days, right? And then we collapsed. This rally, 5 days, and then we collapsed. This was a little rally. I mean, you could say this was an early daily cycle low. Again, like as far as price action goes, this was your new lower low, and this was your lower high. It remains to be seen. Like we have to see, can we get a bounce that can last more than just 1, 2, 3 days, and that takes us to the markets where I think most people are interested. But again, I think there's going to be some, things are going to coincide. It may be that is important timing for, it may be that's important timing for the broader markets. So if we look at the yearly chart, it's really just an inside year, but it's still red. This is SPX. I want to start with the daily. So we have a swing low from day 46 right now. It hasn't broken yet, right? We have not broken below that. That's a swing. That low would be 40.62.51. It seems like very likely we're going to break that low at this point. And so now it's a question of, is this a new cycle that just topped out, a new daily cycle that just topped out on day 2? We closed above the 10-day moving average. I mean, you can make some argument as to where the trend line goes, right? Like, people argue about that all day, right? Like on its most sort of, let's say, its most stringent application, you could say it's right there. So we did not close above that, and so we're still descending into that daily cycle low. To me, it doesn't really matter. Price action will tell us this, right? Either we break this swing low or we don't, and that's what matters at this point. So it could be that that we're either in daily cycle decline, or more likely we're on day 49. We're still seeking out a daily cycle low. More importantly, though, we are in weekly cycle decline. Very important. What we're seeing here, and I'll say this just in no uncertain terms, the market is the market continues to demonstrate to me that it's even weaker than I think. Right? Every time I see, oh, well, the market's really weak, right? I then find out, oh, the market is even weaker than I thought the market was. Look at this. This is our week so far. So we're still hanging on to green by a thread. But now we have to see, we've got one more day. This is one of the things where it's like boxing, where, the guy doesn't want to go another round, but we do have to trade one more day, right? And so we're going to have to see if we can hold out. I suspect we close close red on the week. So that would just mean getting below 41.30.61, because that's the open for the week. Once we're below that, we're red. I mean, I would suspect people don't want to hold onto risk going into the weekend. And so more importantly, we have our swing high on week 5. I keep saying this. We had a swing high once we went below 45.07.57. That was the low of this candle here. And we have been descending ever since. And that's because we haven't had that daily cycle bounce yet. At some point, we will get a daily cycle bounce. At some point, right? At some point. But what we're seeing is that when we do get that, it's probably going to be a short one, right? Like more like 5 to 6 days versus like 10 to 12, because the market seems like people do not want to hold on to risk. Any little pop is sold. That's very telling. So that's the weekly. We're on week 10. We could, if we say we have a 20-week cycle, which is still actually kind of short, that would give us our low around, middle to like early to mid July. And we'll have to see what the bounce out of that looks like. And looking at the monthly chart, this is month 26 of the yearly cycle. This is clearly shaping up to be something pretty ugly, something more sinister than I think most people have sort of anticipated. It's definitely, you can kind of see this period here that I think a lot of people have hearkened to, which I think is very fair. You know, we just kind of chopped around, right? Like that was kind of painful, right? At least this was just sharp move down and then we kept moving higher, right? We just had this little, and then we just kept moving higher. This was painful. That's what we're setting up for here, right? Like, unfortunately, it's like a pretty ugly kind of chop zone at best, right? At worst, we're going, significantly lower, maybe testing these levels here, right? Like, what does that put us at? Just structurally, you could easily see a move down there. Considering we have another 10 weeks to fall, I mean, wow. Okay, that's interesting. 3,200. Yeah, that still put us well above the COVID lows. You could see, like, that would be a plunge. We could just continue to move along this kind of channel here instead, just like, but we'll have to see. And the Q's looking much, much worse. Much, much worse. Much, much worse. I tell you, the market is just treacherous. You can see almost making a new yearly low. Hasn't quite gotten there yet. Look at this ugly, ugly monthly candle at month 26. Similar situation to the SPY, except different count, much more bearish count. I mean, the Qs topped out on week 2. We had a powerful reversal week, bullish outside week. We had a follow through week. That was nice. Like this was definitely a daily cycle low. No matter how you draw that line, we closed above the 10 period moving average. We closed above the declining trend line. And now we are on week 6. Let's see that. 3, 4, 5, 6, actually week 7. So, okay, well, so we're on week 7 again. Think about the fact that, these things tend to be in the neighborhood of, closer to 20 weeks and oftentimes more than that, right? Like 20 weeks at a minimum. So you're looking at a bottom like beginning of August here at best. And again, no reason why that bounce will be bullish. I mean, look at this cycle. It was bearish, right? This last weekly cycle. I'll put a box around it. That might be easier to see, right? Like this cycle essentially, right? Started here, then moved down here. Now we're starting another one. I mean, like you can just kind of imagine the way it plays out, right? Like we just kind of fill out down here, then we bounce, and then we move lower. This is going to be a really ugly year for investors, and so it's going to be really important to make sure you understand how to read a chart. It can save you a lot of money. Oh, I haven't updated the count on this. I'll do that live right here really quickly. So that's our top on week on. So our top so far has been day 11. Did we make a new low today? Let's see. So that was day 34. This is day 37. So it's definitely not as deep in its daily cycle as the S&P, the Qs, which kind of sort of implies more downside. I mean, just in general, the Qs are definitely structurally more broken than the S&P. And remember, they topped out in November. The S&P topped out in January. That's a really, really big difference. Really, really big difference.